Looking at the financial system, you will see the flaws which are now fully apparent. Debt is pervasive at every level. You can't escape it. So what do central planners do when times get tough and the economy turns sluggish? Well, that's pretty obvious. Pump it up. You came here for the truth, so let me unveil that for you. Today we're going to look at which country sold billions in US debt. We're going to cut right to the chase right now and tell you that Japan has sold billions of dollars worth, and you will see that here. It is a continuing trend that is going on. Many people are worried about China, but do not forget what Japan is doing and how much they hold. We are talking about $1 trillion worth, and this has seriously made a difference when you look at where it was back in 2014, 2015, and today. So I'm going to connect that in with a few other issues that we have today. I'm going to show you what's happening in the news right now. And then I want to look at the most important thing, and I've saved it for the end. So hang in there. I will cover this as quickly and concisely as possible. Foreign holdings change in U.S. corporate stocks. This was very interesting. You may not even be able to see this, but there was a small change on the negative side. So we've had consistent months here in the positive territory, but that changed. And while it's not a significant number, it does represent a change. So we don't know what's going to happen as of this time, but I think it's important to make that note, to keep an eye on it, and we can see the next few months how this goes. I would try to cover this statistic. Of course, I always like to continuously track certain statistics and indicators. So we're going back basically into the level not seen since August of 2017. So it is something to note. Anyway, looking at this, earnings give US stocks a boost. Can you believe it? Earnings, which are based on completely fake and fraudulent numbers. You can read Infectious Greed by Frank Partnoy, talks a lot about that. You can see where the Dow Jones is going, headed towards that 25,000 mark again. We'll see if it can continue there. It seems like the market isn't spooked about anything, just for maybe a day, and then it eases off, and then maybe a day here and there, and then it eases off. We haven't seen the previous highs, of course, still down quite a bit in the percentage-wise, but ultimately the market is just looking for areas to buy the dip. And we know who exactly is buying the dip. I mean, we can see the plunge protection team, we have the share buybacks that are occurring, and of course, the central bank itself intervening in the markets. By the way, that chart I was just showing you is from Tuesday's market. So I don't know when you're viewing this, but it's from Tuesday. China cuts deposit reserve rate for the first time in 26 months to unleash cash. Reserve requirement ratio will be cut by 1 percentage point from April 25th. This is directly from the central bank in China. You can see what they have done here. When you have a crisis unfolding, when you have the economy turning sluggish, you have to pump it up. And here, what they have done is basically said, we're going to relax our lending standards. How many times have you heard me talking about this specifically for China? Now, sure, their reserves are going to be higher than in areas like the US, for example. But still, we have to base all of our facts on that particular country or region that we're talking about. And in this case here, China has been decreasing their reserve requirements because they want to stimulate. They want to make sure people keep borrowing and borrowing. It's not a good sign, but the market sees it as a good sign, which is quite topsy-turvy. Feds taxed and borrowed $4.5 trillion since last tax day, $13,700 for every man, woman, and child in the USA. So you could see that number for yourself right here. I mean, just think about these, like how expensive that is. Taxing people at the level of trillions of dollars. And then where does it go? I'm not really sure. But basically, whenever I think of taxes, it's like this bottomless pit that just goes downward and downward, and all our money flows in. I mean, where is it going? We don't really know. It's just ultimately a question. Now, this is something that I've talked about so many times. Goldman revenue by segment. You don't have to look at the segments. What I want to show you is that because of increased volatility, this is Q1 2018, there was a spike upward in their revenue. They make money when the markets are volatile. So they'll bet on anything. I mean, wherever they can get it, they will. We saw volatility basically trading at the floor for the longest period of time. And they took that bet because they knew that the market would continue to slide like this. The VIX would continue to slide. So they were betting based on that and they were winning. And then as the market became more volatile, they have been able to profit off of that. And that's what they're doing. That's how traders make money. That's how trading systems make money. That's how these financial establishments make money. It's based on the volatility. It's based on the markets going up and down. If the market was always flat, there would be no way for them to make money. If the volumes were low, which by the way, they were extremely low on this trading session on Tuesday, this obviously presents us with a little issue. All right. Goldman Sachs total Q1 revenue. Just wanted to show that here that it was declining over the years. And I think because it was so obvious that the central bank was going to print, nothing's going to be a problem anymore. Don't worry about it. But that changed, particularly in 2018, as we saw the volatility finally take effect. Netflix non-GAAP free cash flow, something that I cover again very often. While the numbers have reduced in March 2018, looking at this quarter in particular, you can see where it was a few years ago. Even just last March, it was at 422. But it doesn't matter. Look at where it was in 2014 and look at where it is today. This company is burning through money. Yes, they have a lot of signups. Yes, I realize you've invested in it. Okay, I realize that. You have money invested in this. But just look at what they're doing and how much of, is it worth what it is? I mean, look at the PE ratios on this. I mean, if you want to play technicals, look at the PE ratios. Look at the statistics, the indicators that would show us if the markets weren't supported by central bank monetary easing. Look at it. You would have a completely different view. This is IBM. Okay? Their effective tax rate, 47.5%. No, wait a second. You forgot to read the negative, minus 47.5%. They can come up with any excuse in the book. You've seen the same thing being done by GE and so many other companies where they are able to shuffle things around and not pay taxes. How much do you pay in taxes? I know what I pay in taxes. It's not fun. Every time you go to the store, you buy something, you get taxed. You buy your new home, you get taxed. You go fill up gas at the gas station, you get taxed. You go to buy a piece of electronics, you get those carbon taxes depending on where you live, and so on. Taxes everywhere. Then you make your income tax. Don't even get me started. But if you're one of the big conglomerates or corporations, you don't have to worry about all of this, of course, because you're able to shuffle the books around. Now, this is the big news here. One of the primary indicators of a coming recession is the yield curve, and it is right now collapsing. Okay, I'm going to show you another chart on this in a moment. This is a good way to be able to see, okay, the last time this happened, what occurred, etc. Okay, you can see this heading into the financial crisis, heading into the dot-com boom and bust. All right, and I believe I have one more right here. The NASDAQ, the G3 central bank balance sheet, they're rising for all eternity. But look at what is happening to the yield curve. Very, very bad. If you're a technicals type of person, you don't want to see this, and you especially don't want to see the fact that these are widening so much. Because ultimately what that shows me is that when it does fall down, it's going to be like it's falling off a cliff. It would be nice to see a gradual sort of fall here that took place over a year or two, but perhaps we could see it falling over a cliff instead. That's not what I want to see, because I know what's going to happen to pension funds. I know what's going to happen all along the line. I know about the ripple effect and how this will affect real people in their pocketbooks. Okay, and then you look at the tech financials ratio. Guess what? Hasn't been this high since the dot-com boom and bust. And that's why when people talk about, well, things are different this time around. Look, in terms of ratios, we are still at the same point we were. That's maybe you could say, good or bad, or how you want to look at it. I see a lot of indicators popping up showing us that we are reaching beyond what happened during the financial crisis and going into this euphoric sort of, state that we were in during this time frame of the dot-com boom. And ultimately what happens? People get a little too anxious, they get a little too curious, they start putting money where it shouldn't be, and they pay the price. You won't be able to know when it's going to happen. Nobody really knows when. You can make assumptions, you can take good guesses. Ultimately, we already have more than enough that we need to set this off. But what we need first is a spark. We need this spark to be set off to make it happen. Spark leads in, and everything goes down from there. The spark is what we need. We've been building up until this point, but without the spark, it can continue on forever. Not forever, but for a period of time. And why not? Central banks are willing to completely devalue the currencies until the point where they default. Look at me. Look at Venezuela. You can see that. What's happening today? They're willing to just go all the way. You have to give them some credit on that one. If you found this video informative, please give me a thumbs up. You need to support this channel more now than ever. If you found the video informative, I know you find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. If you want to flip through these books, there are links in the description. Definitely check out all of the links in the description. I'm going to be adding more in there. You will see over the course of the next few days and months and so on. The information that I brought out in my kitten video, yes, you heard that right, if you don't know what I'm talking about, in the comment section below. If you haven't seen that already, definitely check it out. It's still going on, and unfortunate. I'll leave it there. That's all. Take care.